my whole valuation was down like at least I think 30%, 30 to 50%.
Bet.
At one point, my growth investment, I think some of the stock actually down like 90% for some of my stocks.
Oh, bro, that's crazy. Yeah. Hello, welcome to another episode of the Unnamed Podcast. Today we have two guests. One is Neo, a recurring guest from the last episode, and Robbie, a personal friend of mine. Maybe both of you can give a brief introduction.
Okay, sure. So maybe I'll go first. So hi everyone, it's Neo again. So nice to meet you. So I run a blog on stock investing, mainly on dividend investing. So if you're interested, you can follow my blog. It's called StocksPal, right? So yep. Handing out over
Okay,
to
hi.
Robbie.
Oh, hi everyone. My name is Robbie. I don't run anything. I'm a very humble investor who also done one or two businesses over the time. So I'm here to also learn from Rodney and Neo and share some of my opinions.
All right, cool. Thank you for the introduction. Let's start with the topic of today. So today's topic is very, very casual. Just wanted to understand investing in general. How do you guys started investing firstly, and what are the first stock and your style initially? Maybe Neo can start.
Yeah, sure. So, how did I get into investing, right? I think the very first it's come from a book, right? It's influenced by a book, lah. So I think a lot of people actually know this book called, Rich Dad Poor Dad, right? So
Classic.
that was it's like I remember it was in my like secondary school, I like to read books, and then I bump upon this like Rich Dad Poor Dad book, right? Just pick it up, bought it, and just read it, and then I kind of get fascinated with the idea of, you can actually be earning money from this investment thing one. You don't really need to be only working, like have a full-time job, things like that. You actually have another option. So actually that's how I kind of got influenced. I got into investing. And I think in the book, right, it talks a lot more about property, right? So I also did some initially I did some research in property, things like that. But you're a secondary school student, right? How are you going to afford property,
Buy
right? There's no
property.
way. Yeah, there's no way, right? So I think the next natural kind of like progression is that, okay, you start looking at some like unit trust lah, like FD first lah, actually like FD, because you see your parents, sometimes they go to the bank, you ask them, where you going to the bank, put in this thing called FD. Right? So I think I'm not sure whether it's just me, I think to a lot of people it's the same thing. The first thing that you usually start, right, you start with like FD, something that's super safe, first one. Yeah, then over time, slowly, then usually the bank person, if I go to public bank, go to a lot of like different banks also, they have like this salesperson that try to sell you unit trust one, right?
Yeah.
So you slowly you get into unit trust, right? Then later on you go deeper, you ask me, why should I invest this trust, that trust, what this trust do, right? What bond fund lah, equity fund lah, right? So that's how I learned a lot about these differences, and then got interested in equity fund. What is that? Like you buy stocks. Okay, then why don't I just go and see what it's stock about, and then go and study about that lah. So I think that's the way I slowly go from a different kind of product to a more higher risk, and higher risk over time lah. Yeah, that's my personal kind of route.
Robbie, what about you?
I think for me, the very initial journey is very, very the same. I read some books. One of them was Rich Dad Poor Dad. Some other books that I can't remember all the time, but it was all mainly, which is 10 years ago, by the way, which is like obviously more about properties. I don't think there was a lot about stocks, a lot about properties then. But again, because you are just a student, right? So most of the time it's just reading, learning, and not applying anything. But my actual investing moment came when I first started working, and then crypto, Ethereum, Bitcoin was a big hit. So put all my money into that. Then started looking into XE also because that's linked to crypto. When all that crashed, I was like, what else should I invest in? And this is where I went into the stock market. So I completely ignored the whole FD unit trust route. I was like, I was like, this stuff is not making me money
Fast enough.
Risky. So yeah, that's how I started the whole journey. And now like mainly just the US market is where I am really interested in.
Maybe I can share also my side. Right? I think very similar to Neo, but again, I didn't really read a lot of books, right? So I think it's just more upbringing. Like both of my parents are bankers, So like they always mention about safe investment, and I started FD. So of course I started with FD with my mediocre savings. Like I think like it's like 7K or something, just like FD. And I was surprised, right? I put 7K like 1 year later or two. I don't even know the time duration. When I tell my mom that I need to use it, and then they break the FD already. Then it's like, not bad. I got extra like $800 or something. I don't know how long the period
Wow.
is already. I don't remember the interest rate, but that's where I said, oh, money can generate money. That's crazy, right? So after that, right? I saved up some money through my high school years, but the very first stock that I actually buy is actually Maybank stock, 10,000 ringgit worth of Maybank stock.
Oh,
Yeah.
wow. Wait, well,
So
your first stock already 10,000. That's pretty gold, I
yeah,
would
yeah.
say.
So actually, last time I was quite rich. Last time I was quite rich, right? So because my high school years, and then there's some part-time job, right? So my first stock, I straight away think Maybank, not very safe. Everywhere also got Maybank, right? So just buy Maybank. No research at all. No research. And I think over the years, I still hold the same stock. I never sell, and the dividends are quite nice. So I it's the strong sentimental value there. And I thought then after that slowly I transitioned to, actually when I was in uni, I actually got into crypto first. So I got into crypto, made some money there, and I find that the risk appetite over the years started to creep in, and I actually lost quite some money. But overall, I'm still up. Just that when you're up so much and you started losing money, that's where it hits you, right? And
Yeah.
and 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 I started to kind of de-risk a little bit and put more assets into various stocks currently. So now I can say now maybe my portfolio, I can say maybe it's only 20-30% in crypto, and like majority is in stocks lah. So yeah, for you guys, like what's your first stock story?
Yeah, I think I still remember, okay, my first stock, right? Actually, the first stock I actually bought, right, was during my uni time. That was like the first, well, beside my uni, there's this brokerage branch. So it was like, wow, so
Mm,
near. I finally can go and open an account now. But at the time, when I opened the account, it's still like, very manual. When I fill in the
Apple.
form, there's no digital one. Right. So I still remember I spent quite a lot of time just to fill that form. So after that, right after I got the account open, then I straight away go and buy the first stock already. So the first stock I bought is actually Sunway REITs. Right. So just like I
Mm.
Oh,
mentioned, yeah. So I think because at the time I was in like SS15 now, right? Study in like
Yes.
Taylor's Bank at the
Same.
time. So like Sunway Pyramid is like the go-to mall that you always go, man. So to me it's like very natural thing. Oh, Sunway Mall is there, right? So I definitely want to own a share of that mall because yeah, just like that mall a lot lah, right? So
Mm.
so that's how I got into like Sunway REITs, and then I actually remember I made some money from there also. So it
Mm.
actually increased my confidence. The money that I made is not only about the investment, but capital gain I also earn a bit on that.
Mm.
I also don't know why. Maybe I was really like beginner's luck, lah, right? So I
Beginners
think
like, yeah.
capital appreciation is also like 10% within a year, right? So for
Mm.
risk, right,
It's
that's
crazy.
unusual one. It's just like, okay, I got 10% of like capital gain and I got like 5% dividend yield from the time. I was like, wow, this is really good, man. If I can earn this money from like stock and even it REITs. So that's how it actually give me confidence to continue going. Right. So that
Mm.
first purchase of stock actually, give make me more happy, and I actually put in more money from there on. Yeah. So that's how I kind of get started into like stock investing. Yeah, in the first place.
do you continue investing in REITs or what? Because it's all like some REITs is good, and I think average, dividend is about 5 to 10%, right, across the years. So do you keep putting in money, or do you just let it like flow? Just very curious.
Yeah, I think it's a journey lah. So so the thinking at the time is like I was young right? So I think that wow, I can make so much money from risk alone more. Then how about I go for those higher risk stocks right? Like maybe
Mm-hmm.
the stock that can grow, for example maybe tech stocks all those things. But I think maybe it's also timing problem. I actually lose money from all the rest of the stock. I think that actually set my mindset to a certain level where the stable thing are the things that I managed to make money. Where all the high risk thing I didn't manage to make money, which is why I think until now I go back to the normal route already, where I just invest in those very very safe investment. For example, REITs like just already also mentioned Maybank is also one of my biggest holdings So to Robbie's question, I think REITs is still my main portfolio right now. I think in my portfolio, right, REITs actually made up at least 40% of my whole portfolio, entire portfolio.
That's
Oh,
quite a
Lot
huge
is a lot.
chunk.
Yeah. Yes,
Yeah.
it's a very good chunk. Yeah.
So I see that both of you guys and three of us is very, very different in terms of investing style. Just wanted to see extract some of the debates here. Like, what are your thoughts, like maybe to Neo and Robbie, on dividend versus like growth investing? So I can say Neo is more on a dividend investor, while Robbie and I are more like a growth investor, right? So like any thoughts on this? Maybe Robbie
I
can
mean,
start.
for me, it's I go back to my original point. I feel dividend is a very safe bet. Money will grow over time. I think it's very safe. It's like money tree. But for me, the money tree part of it won't get me so excited over the investment. Like when I don't see that money, when I don't see the value of stock go up and up, it just doesn't pump me up. Like when it doesn't pump me up, then I don't get so invested into investing into it, if that makes sense.
Yeah,
So
yeah.
without that, it's hard. It's hard.
Yeah,
That's the
Robbie
excitement
is
factor there, right?
Robbie is a very typical like more on millennial slash Gen Z investor where it needs to be fast. Not fast, I don't like. Yeah,
Yeah.
so I think my point, right? So I think why I think dividend investing not really suitable for me at this point of my life is that because to me I've already, if for all Malaysians, right, we already have a very, very safe thing already, which EPF. I consider that as the bond portfolio of all asset allocation. It's a bond portfolio. Can never, I mean, hopefully Malaysia doesn't happen anything lah, but
Right?
it can never be touched, right? So that is my safety net already. Then for me, my job as an investor is I need to find outsized returns because if you think about it, right, EPF already invested in Malaysia. Then my ASMB invested in Malaysia. My FD invested in Malaysia. So is it a geographical risk or a currency risk that I'm looking at? Or that so my angle was that, right? So I wanted to diversify. And what are the diversification tool is overseas, right? So that's why in one of my videos, right, I mentioned that I think all Malaysians should invest more overseas because our property is in Malaysia ringgit. Our APF is in Malaysia ringgit. Our ASMB, everything is like 5-6%, 4-5%, right? It's all in Malaysia ringgit. So I think that's why I wanted to invest overseas lah. Yeah.
Makes sense, makes sense.
And
I think that's a very good angle, honestly, because I never thought about it from that angle before, but it actually makes sense to me lah. And just to share, I didn't only do dividend investing only lah. I do some growth investing also. And just like Ronnie shared, the growth investing is mainly on the US stocks part lah. I don't know
Yeah.
why. I think US stock is probably the best place to do growth investing because it's just so many, high tech company there, and all the growth is from there, like basically. Right. So yeah, I think I would probably do both growth investing and dividend investing. But the reason why I usually only write about dividend investing, right, is because I think uh I see some success there lah. So more success there for dividend investing because it's stable. Every year the return is pretty standard. Right? But then for growth investing, right, because I started in the peak. I think
Right.
don't know if you remember like 2021, right?
Yeah, free money.
It's at the peak, right? So whatever you buy there, right, you will lose money, right? So whatever you buy at that point, right, until now you lose money. So I actually lost quite a sum of money from there. So my growth portfolio isn't quite successful. And that's why I actually talk less about it lah. So until I am becoming pretty successful there, and then maybe I'll start to talk more about that. But I would say the dividend investing and growth investing mindset is very different one. So I'm doing these two types of investing, right? I need to change my mindset because the things that you're going after.
Yeah.
I
So
think it's
okay.
also like, sorry.
Yeah, go ahead. Go ahead.
I also think it's like the appetite that each person has. I think for everyone, your own nature is very different. So even if like growth investing right now is the best case, let's say because COVID and everyone pump money, but if you're not that kind of appetite of person, no matter what kind of free money comes in, you will like stay as a like dividend investor forever. But like for me, it's also the life stage I'm at. I'm not looking to buy a house anytime soon or a car, any big purchases like that. So I figured if I'm gonna lose money, I'll just treat it like education for
Future money,
future
yeah.
growth,
Like tuition,
future
tuition
money.
fee,
Yeah. I lost like crypto and XE and stocks very initial early on, like probably at my first investing, which is 2021. My whole valuation was down like at least I think 30%, 30 to 50%.
That's small
And
number,
then
bro.
Hey, at one point my growth investment, I think some of the stock actually down like 90% for some of my stocks.
Oh, bro,
That's
that's crazy. Yeah.
because I bought
hey,
at the peak. I bought at the peak. Yeah, at the time it was my first attempt into growth investing, and just a bad experience I have there.
do you
And what do you
and
do after it? Like after you drop 30 foot, what's your reaction? Your first reaction be like WTF, and
okay, you know
is
you
there
know
a
how in
trauma period?
relationships there's the 5 stages in relationships, right? When you first had a heartbreak, first you go through. Okay, I actually don't remember, but tell me this is what happened to me. The same thing that happened in my relationships anyway, which is first disbelief, like how the hell do you lose so much money, and then second is regret, which is like I regret putting my money. I should have just put it in the bank, that I wouldn't have lost any money. That was after that condemning like hatred, like oh my god, stupid stocks, whoever asked me to invest in stocks in the first place, stupid. And eventually acceptance. After acceptance, I was like, you know what? There's a lot of people who lost their money also. So let me take a historical. Let me look at history. As a key learning for me. Does things that go down, does it come back up? So I stumbled upon this video. I can't remember it's by who, but it's on YouTube. I can share later. Which is the title is "What if you only invested in the S&P 500 at all-time peaks?"
Mm.
I'm not sure if any of you have watched that before.
I never
But
watched that, but I
essentially,
saw the article. Yeah.
essentially, it just means if you were so unfortunate to have invested in S&P peaks throughout a period of 50, 60 years, you still end up a millionaire at $2 million. If you had
Wow.
started in the 1980s all the way to today and you invested all-time peaks only purely, you will still end up a millionaire, 2 million at the end of it. So
I think
I took that lesson and I was like, you know what? Even if it goes down, I'm just gonna diamond hands, hold it out, just like I hold my Nvidia stock. Nvidia was one of the first ever stocks I bought actually. And
damn.
then I just held it. I mean, sorry, I held it, but Nvidia itself, I sold most of it when I was able to balance back. I have no idea why, but Nvidia, I sold most of it when I was able to equalize my profit and loss, because at the time I thought like, ooh, stupidly buy graphic cards. This is before ChatGPT lah. Okay, so then I only kept two of them. So my answer is I'm not a millionaire.
Yeah.
So I
No,
saw
because
the same article as well from Stashaway actually. So they mentioned that if you just invest in all-time high through S&P 500, but the average return after that is like 10%. It's still like 10% annually.
Yeah.
But again, right? So that's the thing, right? Because that's S&P 500. But again, for us investors, right, we tend to not hold indexes. We tend to stock pick, right? So I'm not sure if that works in terms of individual stocks or not. That's the thing. Yeah.
yeah, that's my question also, right? Because I don't like we say, okay, we'll just hold it right through the cycle, then maybe one day it'll come back. But the thing is, right, how are we so sure that that stock that we hold, right, ultimately will be there, right? Because not every stock will be Amazon, not every stock will be Google, Apple, Meta, right? So
What
I
if it's
think
Nokia?
that's my yeah, what is Nokia, right? So to me, it's really hard to tell. I understand S&P 500 because I think 100 years later, S&P 500 will still be there, right? Because if you are picking the top companies, one. But if you are doing like individual stock picking, right, this might not be true. So that's my biggest like challenge right now, lah. Because
Mm,
I really don't know. I lost quite some of money already. Then at one point, right, I think starting early this year, I decided to liquidate everything to start from
mm.
scratch again. Because I don't like to
Ah,
see, like I don't like to. I want to have the reset lah, basically to kickstart my kind of growth investing journey again. Because if not, right, I will always be thinking about I bought
how
that
much I
peak, I bought that
lost? How
peak.
much I lost? Yeah.
Yes, 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 yes. So what I did is I just try to do a reset lah. It's restart together, restart again lah. From whatever money that I have, I sell everything, restart with that capital, and then start buying, small, 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 something small again lah, basically.
Do
Yeah,
you guys believe S&P 500 will still be there, right? Because I see, like
yeah.
a little over like 100 years ago, right? It
Mm.
was the not even 100 years ago, it was the British Empire, right? And then only recently US became like a strong superpower. And superpower comes and go, right? I mean, a few hundred years before lah, right? Superpower comes and go. That's like British Empire lasted for like maybe 200 years. And like then we came the modernization and then become US Empire currently, which is roughly a few hundred years already. And the stock market already performed extremely well over the last 100 years. I'm not really sure. There are two camps here, right? Some people will think S&P 500 will forever dominate, right? Because it's all the great companies come from US. But the thing is, what if like there's a new empire coming, right? What if US deteriorates, right? And like the new market is more interesting. And then the entire hypothesis of holding an index fund of S&P 500, the return might not be that good anymore. So the other camp will be like, maybe just buy the world index instead, the VT, right? That lower annualized return, but at least you are more guaranteed. So what are the guys' thoughts on that?
You okay? Nia, you can go first. Yeah.
Okay, sure. Yeah, I think it's okay because like when you say empire rises and empires, goes down, right? I don't think it's usually that fast one, right? So usually you see, or if there's a new empire upcoming, then you see signs of it, right? So I think investors will have some time to react to it, right? So I think if we have that enough time to react to it, right, we just need to, because investors is always living in the future, man. So we need to future, man. So if you know that the future for a certain kind of like empire or what that's upcoming, then you will slowly move your money there, man. So I think there are enough time for us to react, so we do not need to like worry too much about it, to me, personally. Yeah, so that's my point of view. Yeah.
Robbie?
For me, in this world of investing, there will always be winners and losers. So in order to stay as the winner, you need to be on top of where the macroeconomic situation is at. For me, well, if I had to tackle like, I mean, a few things. Number one, which is what if the US doesn't stay forever and there's somebody else? I think this is where economics, specifically investing, comes in hand with your understanding about the world, environment, and politics also. To understand, basically, I think a good metric would be if you look around the world right now, there is no easier place to do business in than the United States of America. And if one day this changes, I mean, you look at France, they're going to change their president maybe soon. So things might change. But right now, Europe is not really a particularly strong place, not good for the ease of doing business. They're very traditional. They don't have that kind of risk appetite. So people like Sam Altman wouldn't have been big if he went to EU. He would have been regulated so heavily, there would be no chance of it just rolling out ChatGPT 3.4 that quick. So right now, there doesn't seem to be much potential risk because ease of doing business is not anywhere as great as the USA. Like even 10, 20 years ago, people were talking about how, by 2008 and 2010, China will have overtaken the United States. But you can see like right now, they're still not there yet. Somehow, the USA is still there. And I think recently, powered by all of these AI-driven companies, you see people like NVIDIA, you see people like OpenAI, recently invested by Microsoft. There is no greater innovation in the world right now. At least that's what I think. I would be a great Donald Trump supporter at this rate. But then I don't see anything changing, at least in the short term. But this is where also, if you want to stay on top and be a winner investor, I think this is where you also need to not just understand fundamentals of a stock, how it works. You also need to understand the world and how it changes over time. If you don't monitor whether or not there's big companies crossing across other regions, whether or not other countries are opening up to their way of doing business, then like it doesn't matter. Then you just be investing blindly in the S&P 500, which is what I call very casual investors, people who like just here for the ride. But if you're here for the ride, then I guess anyone would lose money if they're just here for the ride and they don't really like educate themselves about what investing is all about. And I mean, for the first, honestly, I think like even for all of us, if you look at a lot of people for the first 5 years of their investing, I'm sure they'll make a lot of big losses all the time, here, there, left, right, center. But it is I like to quote this thing that I always see people say. I don't know where is it originally from, but it's not about how much you invest in the market. It's about your time in the market. So if you're able to keep yourself in the market and you keep learning and keep changing the way you invest, I don't see any point that you can lose money. But putting money into the world VF, like I don't think that's like great because that's like putting it into dividend for me. Like then I'll just put it into like summary REITs. Even summary REITs would have made more money for me than VF, I think.
Yeah, I think I echo your point as well. That's what I feel about China stock market. Previously, it was slightly booming, extremely well in 2021, and then something happened to the dictatorship, and they just decided to f their own market up. And yeah, so I'm now still left holding the bag, right? So I was actually quite bullish on some of the stocks. One of my main holding was Baba, so it's my second largest holding currently in my entire portfolio. Still underwater, like by 10 or 15 to 20%. It used to be down extremely high. So I started buying Baba was when it was $200, and
Hmm.
and then when it dropped to drop a bit, then I just buy again. Drop to 150, I buy. Drop to 100, I buy. Right? That's DCA, right? Correct. Everyone say DCA, so I don't know DCA not. So it never meant to be my second largest holding. But I think the PE ratio, the metrics all look damn good, right? So I started buying more, right? That's some kind of sunk cost fallacy as well. So I started buying more, and like when it dropped to 60 dollars a few weeks ago, I started buying even more, right? So now my average price is $90 from all the averaging down. Now my average price is $90. I think the last recent price was like 80, if not mistaken. It's 80 or 70. I stopped looking at it already. So again, I'm pretty have a good chance to break even after a long while. But again, I'm just very curious, like for you guys, what's your biggest conviction at the moment and why?
Wow, that's a really good question. Biggest conviction. Yeah, actually, at this point of time, I'm still a bit. I think maybe I'm not the right person to talk about it because
Mm,
I'm still a bit lost in terms of like growth investing because just like I mentioned, I just start to reset. Right?
mm,
So at this point of time, I'm still not on the right track yet, I would say. So I did buy things here and there a little bit. Right? So I started going in to buy maybe the Magnificent Seven, right? So for example,
Max 7.
Amazon.
Yeah.
Yeah, so like for example, Meta. So far I would still say that my main holding in the kind of growth investing part is still like things like Amazon. I think I bought Amazon like something some time ago, and my entry cost is pretty low lah. So over time, as it grow,
Amazing.
I will like add a little bit of money over time. That's how I'm doing it. But if you're talking about something that's a little bit not so conventional one, maybe my biggest holding that's unconventional is probably SoFi lah. Not sure whether you heard about it before. It's called Social
Fintech. Yeah.
Finance. It's a fintech, a digital bank in the US. Its growth has been amazing, but then its price has been dropping, and keep dropping lah. I don't know why. The more they deliver in terms of the business, the more the stock price drops. So to me, it's like a no-brainer if I just look at the numbers. I don't know what's wrong with the stock, why it keeps dropping, but I'm just keep buying it over time. I think it's a bit of similar situation with Rodney lah, when you talk about like Baba, right? So I think it's a kind of a similar situation. So I'm betting that maybe one day the market will price it correctly because for a company that's in such a high growth situation, right? Usually you will need to give it a higher valuation one lah. So yeah, so
Mm.
that would be my highest conviction for now.
Fintech. Amazing. What about you, Robbie?
I think at this point everyone knows that I
I
think
know what it. I know
Alphabet
what
is
it.
under
Google.
I Alphabet is underappreciated by a lot of people. Amazing PE as most of the market defended itself against search from ChatGPT overtaking the world, and yet it's still just like a bit over $200. Before this is like 160, 180 kind of range, and I feel like there's a long way to grow. Magnificent
Yeah.
Seven, everyone knows it's called Magnificent Seven for a reason. I don't put everything into Magnificent Seven, just a disclaimer. I have like about 40%, 30% in VOO, Vanguard. Uh, and the rest is split among the Magnificent Seven. except in Amazon, surprisingly. I've never invested in
Amazon.
Amazon before. I have everything else except Amazon. I don't know why. Maybe it's because I work in e-commerce. I don't want to look at e-commerce anymore. So yeah, but Alphabet, they have everything from cloud, they have everything in consumer tech, they have search remains 90% of people, they still have more than 90% of the market. Everybody still goes to there if they want to search something. I'm sure it's the same for you guys also. When you want to find something, you don't go and say, hey, ChatGPT, find this thing for me. You go onto Google and you search for the thing. You still go through the same process you always gone through. There's other, how do I say, leverages they have to use AI a lot more than what other people can. They have Google Workspace also integrated into it. I'm not sure if you've seen it, but they've also introduced specific AIs for education, for music, for people who write. Also, there's a lot of use cases for their AI software. A lot of people see it on a very, how do I say, from a very frontline perspective, which is okay, as a consumer product, what do I see in the market? But there's a lot of behind the scenes, working with a lot of governments, working with a lot of industry people that most investors don't see. But having said all of that, it really don't matter because the market is also moved by people, by sentiments. Even if you have the strongest fundamentals in the world, if the whole world hates you and they just are really bullish on somebody else, you can't escape that until the actual earnings
Value
deliver.
come out,
If
right?
it
Yeah.
until the actual earnings deliver. But that is going to be a long time horizon. But fundamentally, just to summarize, Alphabet is very undervalued to me. Hopefully, my saying becomes true 1 to 2 years from now, and you see me retiring from my life and on a yacht right now.
Yeah, I think Google is a stock that Robbie and I both invested in at the same price point. I think both of our average cost I think is the same. It's 130-ish because at that point of time it was when ChatGPT is launched and everyone was bashing Google like the red light alert, right? That's where I'm like, okay, fuck, right? Google is in danger, but that's where I like to buy. That's where I really really like to buy. But I really regretted not buying that much. Right. I don't think I buy as much as Robbie is, but I think I'm glad that I'm in because it proved a point where when everyone is panicking, that's where you must be rational and think, is Google gonna be replaced by other app where where Google is already in all our life? So that's where I started to think and feel like Google is still undervalued, even though like the entire market was saying ChatGPT going to replace Google, the everything is going to be replaced by ChatGPT, which I don't really agree with. So I'm glad that I've invested in Google. But again, my strongest conviction is not Google. It's two stocks, two to three stocks now. But I think my strongest conviction is Apple actually. So I'm kind of a capitalist, right? I think and no one would think that no one would think I would say Apple, but it has been my strongest performer in my portfolio. So I started looking at Apple when it was 1 trillion market cap, and everyone was saying that it's crazy, the first $1 trillion market cap stock, right? And I didn't buy. Because I buy to the narrative of the market where everyone say $1 trillion is crazy. It's just selling phones, right? And I see it go to $2 trillion, and that's where I'm like, did it just double in the blink of the eye? Did it just double in front of my eyes? And I started researching more about Apple because I wasn't really a user. I was a brief user of iPhone 6, right? I was a brief user and I hated it. And I switched to Samsung, right? And I recently only moved back to iPhone. There's a reason why, because I finally understand the behavior of a user, right? So for me, once I got an iPhone, you know what's the next thing I get? A fucking Mac. And then the next thing I'm looking to get is an Apple Watch because I run now. So I think the user behavior is so sticky that it just justifies, no matter how bad the device is or how bad the upgrade is, the sales will slow down. It is slowing down, but it's slowing down at it's such a strong, sticky product. Even if slow down, it's still huge, huge money. And I still believe that Apple has a lot of room to grow. Because if you think about it, yeah, even though Vision Pro is a failed product, right? Like not many people buy it. It's too expensive. But again, right, if you think about their marketing sense here, why do they launch Vision Pro first? No one launch a pro product before a basic product first, man. Normally it's basic product and then pro version. But they launched a pro version just to show off their technology. And I really believe that in the future, they will definitely come down in price where the normal all of us will buy, and we will be glued to it, and there will be new products coming in. Maybe like let's say Galaxy Ring just launched, right? What about Apple Ring, right? All these things will launch and they will capture a huge market. That's why, and they have so much cash, right? Any competition, I just buy it over. And like any AI, or okay, it's so smart, right? Because a lot of people are bashing Apple at the point of time, and it dropped until $160, $160, if not mistaken, lah, where everyone is bashing Apple that there's no innovation about AI at all. Yeah, you guys are very outdated. You look at all these phones, Samsung is doing AI, Google Pixel phones are doing AI. What about Apple? Apple is becoming a brick. Are you becoming a Nokia moment? Right? But I find it very smart in terms of their management is that why do I need to build my own AI model when I can partner? Lower costs, right? I can rebrand it to Apple Intelligence, integrate it to all my suites, and I get a free seat in OpenAI board. Microsoft needed to invest to have a board seat in OpenAI, while Apple just be like, I'm going to partner with you, like it or not, I'm getting that seat, and OpenAI would not be exclusive. What if let's say Lambda is better or Gemini is better? I can always partner with them. So I think the big power play is really Apple, and I'm still very bullish in terms of Apple. But I do think it's slightly overvalued now, lah. Yeah, I do think it's
It's
slightly
always the
overvalued.
market difference.
Yeah, I think it's still slightly overvalued now, but I'm fine because I find it overvalued $1 trillion and $2 trillion market cap anyway, and market will
So
buy
it
that
continue
shit.
to grow. Yeah.
Yeah, it will continue to grow. Yeah.
Mm.
So do you guys like measure your performance against S&P 500, and have you guys outperformed S&P 500 or underperformed S&P 500 over like your years of investing so far?
Yeah, I think for growth portfolio, definitely S&P 500 is the kind of like benchmark lah, right?
Mm.
But obviously, because I bought at the peak, so definitely it underperformed the benchmark by quite a lot, right? So I'm just restarting this year. So at this point in time, I don't have the exact number for that performance
Mm.
yet. Actually haven't looked at it at all, right? So actually, to be honest, I'm still looking at a way to actually find can invest in like growth investing like reliably one lah. So I just want to ask like both of you,
Mm.
like Ronnie and Robbie, like how do you define growth investing in general? Because when you talk about growth investing, right, I realize that different people will define it differently, one, right? For example, what is the criteria they're looking at? What are the type of stocks that they will be looking at? Usually those
Mm.
are mean different thing to different people lah.
Yep.
I just want to know what do you think? How do you find what is the stock that you consider as a growth stock? And then how do you decide, whether you want to invest in it or not?
Robbie, you can start first.
For me, it's very simple. Anything that I feel is gonna make a shit ton of money in the future, I'm just gonna invest into it. Which is right now, like Ronnie, I hold a lot of Apple stock. Actually, I hold a freaking huge amount. Because I've seen people around me like use it like crazy. Once you get into it, the stickiness. We all work in platforms, so we know how important user stickiness is. And when you go into an Apple product, when you actually combine a product itself is not great. Like iPhone
Yeah.
itself is not great, Mac itself is not great. But when you combine everything together, I swear, kid you not, there is not a better product in the market. But individually, if you versus, I'm sure there's a better Samsung something out there.
Mm.
Even Apple's been so strong that even my dad, who never looked much into phones, like recently changed to everything. And then what his one sentence summary was why he bought into Apple is, as a consumer product, is it just works. Everything just works. I don't need to press the Bluetooth and then like click on again. Sometimes it just disconnects and stuff like that. Everything just works. And I think that's the greatest USP. And that's why it's making shit ton of money. everyone knows why Nvidia makes a shit ton of money. Everyone knows why Alphabet is making a shit ton of money but undervalued, so no one knows that. Tesla, I hold that also, but recently a bit off, but like I still have strong conviction for the future. Mainly because it haven't sold his AI robots yet. The moment it's selling his AI robots, I'm gonna make a shit ton of money, and we're all gonna go into Will Smith's movie scene very soon. If you guys watch Iron Robot,
Robbie, I think
but
Robbie
yeah,
is very, very optimistic. Yeah, he's a very optimistic investor. But
I'm a very
Yeah.
optimistic, yeah, because
Yeah.
I feel like we all like S&P 500 is not gonna go away, like at least in the short term. We all know S&P 500, the main stocks is the Magnificent Seven. So for me, there's not so much time to look into holdings for me. Like, you can't look at every stock in the market. I look at most of the Magnificent Seven. I look at which one I think can make money. But there are some other smaller things that I think I look at also. That I'm going to quote this from the Joseph Carson show, which is toll
classic.
roads. Toll roads stocks. Things like Visa and MasterCard. Biggest payment providers in the US, biggest payment providers everywhere. Even your Grab card is a MasterCard. My Shopee card is a Visa card. So most of the cards dominated exclusively by Visa and MasterCard. And credit cards is still being used. You discount China, but everyone else is still using a lot of cards. So it makes a no-brainer to me. Visa and MasterCard still continually make a lot of money. That's something you can look at. On the streaming side of things, I have some keen interest also. Look at Netflix, went down all the way, coming back up like a goddamn comeback story of the year. Disney is another one. Disney and Netflix, very strong holdings also. So,
I disagree on that part.
okay. Then for me, it's like a no-brainer to just invest in anything that is making a lot of money. Of course, you can argue and say, well, Robbie, I don't know how he's going to make money until the moment he makes money. And the moment he makes money, everything is already too high. But I've said the same thing over the course of so many years. Same thing like Ronnie. When Apple became the first trillion, I'm like, whoa, what the hell? First trillion company and then 2 trillion. Like, if you look at the fundamentals, it's making money. And if you know what kind of things is coming out in the future, you know what kind of things that other people are coming out, you have a rough sense over, whether this thing will continue to sell. It's as simple as, for me, let's say a very favorite noodle place that you like to go to. If you know around you there's no better noodle place, everyone's still going to queue for this noodle place. As long as everyone is still queuing for the noodle place, you're like all set and all good. Yeah, but how about you guys? What do you guys think is like your strongest? Like, what do you determine before you buy a stock? Like, what do you like about it? Just the name, or what's your criteria?
Yeah.
For
Then,
me,
yeah. I do have a question to follow up with Robbie here. Because just I mentioned about the potential, you're looking at the potential, at the money that's going to make right over time, right? There's
Yeah.
a huge money there. Do you use like kind of like valuation metrics or things like that to evaluate? Because I think growth is the hard thing about growth, right? Is how do you value it, right? How do you know it's undervalued? How do you know it's overvalued, right? It's really hard to tell. I think that's the challenge that a lot of the growth investors will see.
Well, to be honest, there's no one. You can base it on JP Morgan, Fitch, like they have a lot of credit ratings and stuff like that. But ultimately, you can read everything, like Morningstar ratings and all. They have a lot of different ratings, undervalue, overvalue. So many people look into it. But I think for me, having a generous sense of business direction and economic direction will bring you very far. Like undervalued, overvalued, honestly, you can argue and say like a lot of things. Like Nvidia is overvalued like hell, like that. Like
overvalued.
It's all down to your own qualitative judgment. But having said so, I think just to echo my earlier sentiment, a lot of people say if you invest in the S&P 500, you can like invest at the all-time high and you still go up. I've invested all-time highs before in Meta, Apple, Alphabet, and he has proven to me time and time again that it still goes up. Meta, I was once down 90%, and I just like fuck that shit. I'm not gonna look at it. Now it's up 100%. It's actually insane. So like I think you need to have your own value system in terms of what do you think are things that you want to look at? What kind of industries? For me, it's all tech. I work in tech. I have very keen interest in tech. So we are very fluent, right, with how tech works. How many users coming into the platform every week? How many users are buying on the platform? How many are investing into you? How many they're spending you week on week? Is that increasing? If that increases, if these two bucket of metrics increases, number of buyers, number of people investing, the total basket size equals revenue. As long as these two metrics keep going up, everything in the world keeps going up, earnings will go up, and everybody will feel happy at the end of the year. So for me, like if that's my value system in looking at it, fundamentally it's just like that. So if those kind of things work out, and if you look at their future things they're doing, when they make announcements, what are the other stuff they're doing, you look at it versus their closest competitors, is it something that you think is something that the market will buy in versus what other people are doing? You can't have 100% hit accuracy, of course, but I don't think it's that far-fetched to, for example, say let me put 30-40% of my money into Apple, considering of all the things you spoke about, and also considering Warren Buffett, one of the biggest investors of the world, also invests most of his portfolio into Apple. And following in the footsteps of one of the greatest in the world, I think, yeah, well, sounds like a straightforward, logical decision to do.
Right. I think for me, in terms of growth, right, a very simple one. I don't think so much, right? So for me, my value system, I like to see a B2C companies. I like to see whether I would use or Americans would use. I don't see other markets. Okay, maybe two markets I will see: China market and also US market. So in terms of B2C, right? Growth story. I basically look forward now, right? So looking forward, thinking in the future, will this be disrupted or not? What are the possible way of this being disrupted? And is there room for it to grow? For example, right, let's say the Apple example, if I can think of new ways to grow the company, I'm pretty sure the management will find a way, right? I'm pretty sure the management will find a way already. Let's say Tesla growth story, right? I'm pretty sure they will. But again, each industry have different cycles, right? For example, Apple, not really, they don't care about interest rates. But in terms of Tesla, which is a majority car company, which relies a lot of loans, then interest rate macroeconomics does play a big role. And what I like about evaluating about growth investing is like this, right? I like to see what is the expectation of the pros. For example, JP Morgan lah, all these Credit Suisse or whatever it is, their average price and what is the expected earnings per share, what is the earning, what are the metrics they are looking at. So I just look at that because what I noticed after investing for years, as long as your quarter earnings beat expectation, you sure make money, man. You sure make money. So very simple. So you just take a look at the expectation of the market. Is the expectation can reach or not? You think can reach or not? You try to make sense. Can reach or not? Make sense to reach or not? Then if really the expectation is so high already, right? And then like you calculate no matter what, I cannot hit this sales one, like the like global pandemic slowdown, how to reach the same amount of cars delivered in terms of Tesla in 2020. Impossible, right? You want to loan also a bit hard already, right? Then if the expectation is still so high and you think that it cannot reach, then just don't buy lah. Just it's very to me that's how I value. Number one is just to see the future prospect of things lah. Yeah. I just focus mainly on B2C because I don't really understand B2B, right? So if as a consumer, because what I think, right, why Magnificent Seven is Magnificent Seven as its top 7 companies in S&P 500 is that it's a B2C company where people understands. If people don't understand the business, they won't buy into the business. For example, right, Palante, right? Palante is a hot stock. Used to be lah. I mean, it still is, right? But actually, majority of people don't understand the stock, right? And I invested into it, but it's just that I don't invest. I don't have strong enough conviction because I don't understand 100% of it. I don't understand enough of it. I do make money in the end of the day because it's a hype stock anyway. I just buy, but just that I feel if it's not a B2C company, it's hard for the entire market. Because in the end of the day, right, if you really want to think about it, right, stock market is a pyramid scheme. In the end of the day, someone must buy higher of you. So in the end of the day, stock market is a pyramid scheme, right? So you must always find a downline to get your sell your shares. So what is a better way is the B2C, where users can understand and they can put outrageous valuation on top of it. So that's why I like to that's how I evaluate it lah.
Understand. So you look at a particular kind of segments that you understand
Mm.
the most, because that you would be able to build a strong conviction and actually invest more into that lah. Understand?
Yeah. So in point of Tesla, right? So a lot of people say Tesla is an energy company. Some people say it's a car company. I still think that it's a car company, but again, it slowly transitioned because the last quarter result, the energy grew super well, beat expectation. That's why there's a strong rally over a few days, right? But I don't agree in terms of like the AI robot stuff. I really don't agree.
Mm,
Because right,
mm,
I do think AI, I mean, I don't want to use AI robots. I just think of robots, right? Humanoid robots, right, are the most non-functional robot in the world. For example, right, why would you want to buy a humanoid robot to clean your let's say clean your household items when you got a vacuum? To me, right, robots should be a specific thing. A humanoid human structure in the end is the very inefficient model, right? You want to sweep the floor, you need to go down to sweep the floor, right? But a vacuum focused robot, right, can just is on the floor already. Now, why do I need a humanoid robot? So that I don't believe that part of the growth story of Tesla, but I do believe in terms of the robot taxi part, the energy part that they gonna take part of lah. Yeah.
understand. Actually, the humanoid, what's the use case that Elon Musk has been talking about? Is it
They,
to
they, they, they
replace
say they
the
can
factory
replace
worker?
factory worker, mundane tasks.
Ah?
But again, most of the factory is already using robots. It's just not in a humanoid form. It's just like, let's say, factory worker, packaging law, we got so many packaging line already, right? Why the hell you need a humanoid robot to help package for you? So inefficient. So that's why I don't believe in the growth story. But again, I might be wrong. Right? I might be wrong. Elon is Elon anyway. So yeah.
I
Yeah,
don't
because I
believe it.
think
Like, just to echo your Rodney sentiment, like I don't believe in like humanoid robot. It just doesn't make sense because it can be as simple as humanoid robot cannot actually carry very heavy items parcels because the legs will be too weak and it's just inefficient. You should make a stronger upper instead of making a human. But I also think they have very strong advancements and research in this area that they will be able to adapt the robot to the use cases of the B2B market whenever they want. Because things like that, the mechanics of it doesn't change. You can easily modify the humanoid legs to be like a very strong base. And why I have such strong reasoning into the bots is because warehousing e-commerce is getting bigger and bigger. A lot of people buy more and more e-commerce. Can't share any data, but e-commerce is getting bigger and bigger. And eventually, to make it cheap, we need to make the warehouses cheap because a big bottleneck comes from warehousing costs, putting stuff into place, delivering items. So, I really think this robot shit is gonna like come to fly, and I can't see anyone who has more greater advancements in terms of being able to develop something for use already, except what I see from Tesla.
Okay, I think it has been quite a fruitful discussion just now. Let's wrap it up. Any final thoughts from Neo and Robbie?
yeah, maybe I'll go from my side, right? I think just now we spent a lot of time talking about growth investing, lah, right? So just like how I always share to a lot of my friends around me, especially the beginners, is that different people will find their own investing styles one, lah, right? So what we discuss here might not be the thing that works for you, right? Because for certain people, just now, I think Robbie also mentioned that he finds the excitement factor when doing this in growth investing. But I know a lot of people, right? They cannot run if they realize that their stock can go down by like 10% in one day, right? They cannot sleep at night. Right? So different people will have a different investing style. Make sure they understand. Ultimately, it's about understanding yourself, right? Understanding your own goal, and then to see, ultimately what suits you, right? You might not find what suits you immediately, but if you try enough, right, you'll find something that that works the best for you, one. right? So that would be my kind of like message to the people. Yeah.
Robbie.
Well, same thing. Like in anything, you can make money. Dividend, you can make money. Growth, you can make money. You should choose something that best fits your criteria. It's the same thing like finding girlfriend. Not necessarily most pretty one means is the best one. It just means what you value and what is suitable for you at the end of the day. But definitely, I think I never invested much into dividend portfolios before. It'll be something interesting to see. I think REITs is like a good place to be in also, to be honest. Like we've been spending a lot of time talking about Magnificent Seven, S&P 500, but I think having said all that, REITs is an area that is underappreciated in the market. A lot of people think like that one don't make sense, but actually it's a pretty good place to be in. Like and something maybe we can explore talking about in the future also.
In the next episode, maybe. So I think one of the closing thoughts from my side is, I think I want to echo Neo and Robbie's point as well. I think just start, right? You never know what you like to eat. For example, I have an analogy, right? Like when you are a baby, right, in investing, or you're a baby in real life, right? Just eat as much as you can. Maybe you never know, like you like chicken rice ka, you like laksa ka, you like char kway teow, right? You just try everything, and when you're young, it's okay to fail and lose money, right?
Exactly.
To me, right? There's no point losing money when you are like 50 or 60, where you can lose 6 figures magnitude or 7 figures in magnitude, right? For me, as you are young, you should lose 5 figures. You should, and it's expected to. Of course, rule number one, don't lose money lah. But I think failing early on and trying early on is okay, as long as you are that, like, you have started the journey, and like looking at your portfolio grow over time actually is quite satisfying. And the 1 day drop, right? So last time I used to see the 1 day drop, and like, what the hell, a few $100s drop in a day, right? Now few $1,000s drop in a day, I'm all right, right? So hopefully in the future, one day drop, like in 5 figures dollars, I wouldn't be faced. It's normal, right? So I think it's okay to fail early, and like, yeah, just start invest early, and yeah, just try, okay.
Exactly.
Okay, let's wrap things up.